All right. So guys, let's go over this real quick. I know it's Easter. Gerald, good hit presenter in the chat. Everybody, good morning. So Gerald, type in presenter so I know you're there. Make sure we got this recording. We're going to go over a new algo that we just sent out. I thought we'd do a quick recording. I know the markets are closed, so I thought we'd go over recording how this works. And then we're going to dive really deep into it next week. A lot of traders aren't in here this morning. So I thought we could, let me see if Gerald's there. All right, everybody, good morning. Those that are out there, can you see the charts okay? I know a lot of traders aren't in here because of the, the markets are closed. We're going to do a quick video on how this works so we can send this out to everybody. But Gerald, let me know when you're ready. And let's get rolling on here this morning. All right, so I want to go over this. So the markets are closed today. I thought it'd be a good time to go over a quick video with Gerald on how the new algorithm works. We just released it this week. You guys are going to be getting a PDF, a short PDF, and then we're going to be going over this all next week in the trade room, Monday through Friday. I'm going to start breaking this down. This is a full automated system. I'm going to show you this in today's video, how I like to use it, and then how we can use it on these different markets. So let's first go over it. What's the big upgrades to the system? So let's first of all go over it. Then I want to do a market replay, show you how this works. So the first thing, this is our LiquidityGrabTrader. And Gerald, can you type in exactly what you named it to go out to the traders on your name to make sure I got it right? So I want to make sure that you guys understand there's two versions you got that came out to you. One is on a tick and one is on a close. So Gerald, type in exactly what you put out to the members, and then I'll make sure we get this right. But the biggest upgrade was that that it will only take trades with trend. Only take trades or setups with our zone trend only. Okay, so it's only going to take trades with our zone trend only. So that was the biggest upgrade, and I'll show you why that works on these different Rico sizes, which you guys are going to be getting also, you members. We're going to go over that next week, Monday through Friday. So that was the big one, is it will only take setups with the trend only, or zone trend. Our zone's been tested for 30 years, being the best zone reverse price. So that's number one. Number two, the second thing that we upgraded with the overall, and you're going to see it in this video as we go through it, you have a profit and loss target per trade. And why that's important, a lot of you guys are we just released it, and I'm going to be going over this next week. So it's very important that you pay attention next week in the room. I'll be in at 8:15 every day, Monday through Friday next week. Every single day I'll be in the room at 8:15. So if you can attend, that's great. And then I'll have a short PDF, like I said, for you members who just got the software. The software, Gerald just got the software out for you to download on your own systems. So remember, download it, and this video is going to help you out greatly on understanding it. So 3, it only takes setups with our zone trend only. So if trend is up, it's only look for buys. If trend is down, it's going to look for sells. You know, you have to worry about a counter trend trading per different Rico size. Okay. There's a profit and loss target per trade. Now you don't have to think, well, I want to shoot for 4 ticks, 8 ticks, 10 ticks. Now you can say I want $300 per trade per one contract, which I'll show you here, and $500 or $300 per loss per one trade. And then as the market moves, it will try to shoot for those targets. So that's the second thing. the third thing, the third big thing is that you get the it takes the first that takes only the first liquidity grab after the V top or bottom, and that is with trend only. So it's only going to take the first liquidity grab after the V top, V bottom, and that will only and it will do that until you get to the next V top or V bottom after a trend change. Oops. So it's not going to take any. Wait a minute. What am I doing here? It's not going to take any other trades based upon only that criteria. So it's going to look for the first liquidity grab. Put this over here. After the trend change. Okay. The fourth, and this is really important, is it's got a trailing stop loss. So after you enter, I'm going to show you on these different Rico combinations next week how it works. This can be a full automated system for you on different Rico sizes. So now we have a trailing stop loss and profit adjustment after entry. So Chart Trader with NinjaTrader allows you, and I'll show you here on when I run this, what I'm talking about. It allows you to adjust your profit targets and your profit losses. And this does the same thing. So these are the four major upgrades that we have for the system. We have, it only takes setups with our trend zone only. If our trend zone's green, it's only going to take buy setups. If our trend zone's red, it's going to take sell setups. The profit and loss target per trade. Let's say you want per one contract a $300 target and a $300 stop loss. It will work that trade for you. You don't have to say, well, this I'm looking for 4 ticks on my first target, 6 ticks on the second target, 8 ticks on the third target, so on. It does a total profit and loss per trade. The third thing, it takes only the first liquidity grab after the V top or V bottom. And then the fourth thing, you get a trailing stop loss and profit adjustment. And I'm going to show you how that works in a second when I do a little market replay here this morning. The fifth thing is you have time of day trades. So it's only going to take trades during the time of day. Some of you, what you're going to find when I train with you all next week, we're going to go to some extensive training how this thing works. So if you just got it in your mailbox, just get it downloaded, and then I'm going to show you how it works on different. I'm going to show you how it works all next week, and how some of you want to use this for full automation on different Renko sizes. I'm going to show you the combination of Renko sizes to use. I like to use a combination of Fibonacci sizes, which is the Fibonacci Renko right here. We're going to show you how that works also. So these are the 5 main points to take away from the new software on the upgrade, because our old software, it would take the counter trades. You'd have to turn it on when a V top comes in or off, and then turn it back off and wait for another V top, V bottom. Now it only takes trades with trend zone. So if you find a nice Renko size, which I'm going to give you a lot of combinations to use that you can forward test. Remember, with Renko bars, when we're doing Renkos, Renko bars like Renko charts, they are nonlinear, right? So they focus on the price direction. They're not focused on time. So these charts are not focused on time, right? So when you use Fibonacci fib levels with it for the tick, the trend, and the offset, it can identify very significant price reversals. And I'm going to show you how that works here this morning. So remember, this is directional based, right? Price direction versus then price chart. Why is that important? because liquidity grab, we want directional moves in the market. So those are the big 5 things to take from this, is that not only am I going to show you exactly how this works there, I'm going to show you the combinations you can use, on the different tick, trend, and offset levels to use. I'm using one of these combinations right now in this video, and you can do market replay on these different combinations of these different Fibonacci levels, which I like to use, and you can see what fits to your trading style. Some of you want full automation where you're using, let's say, a Renko size of an 8, a 3-11-203, or a 5-8-13, or 7-28-45. I'm going to show you these different combinations, and then you can run it on different markets and see how it performs based upon your risk tolerance, how much profit per trade, how much loss per trade you want. So I'm going to run that market replay and show you how that works. But I'm going to show you can use fib combinations to come up with your tick, your offset, and your reversal on the Renko. Remember, Renko bars are nonlinear, right? So they focus on price direction. So price direction is very key, because with price direction, it's not time-based, right? So, Fibonacci analysis is more abstract, right? So these different combinations, they can produce really significant possible turning points in the market when you're using these different combinations. So I use this as a standard board, which I'll get out to you, and you can use different combinations. And I'll show you this. This is a combination right here that will run on the algorithm that works well. But let's say if you want shorter Renko charts, I'll show you how it works, and you can do market replay on it and so on, and see how that level works also. But that's something we're gonna go over next week. But the main thing to understand, I have 2 versions that we got out to you guys. The first version that I got out to you, that Joe got out to you, is a close and a tick. So I'm going to show you the difference here in a second. So we have a sim close liquidity grab, and then we have a sim tick. The sim tick is what you want to use. Sim tick liquidity grab strategy. That's my major one. That's what I'm showing you right now. The reason the sim tick liquidity grab trader is the number one that you want to use over the sim tick close, and I'll tell you the difference in them right now. The reason being is you can adjust the trailing stop loss and the profit adjustment under the sim tick LG strategy. You can adjust the stop and the target. So for example, let's say you put in $300 stop loss per one contract and $300 profit per one contract on the trade. As soon as it hits that $300 amount to the tick, it's going to get you out of that position at a profit. It's going to get you out of that position at a loss. I don't care if you do $100 per one contract and $100 per stop loss. As soon as it hits that tick to that profit or stop loss target, that's when it's going to fire you out. Okay? Hey, Venkat. Hey, George. So this is the one we're going to use. So what we're going to do, Venkat and George, is I'm going to show you full automation with this. And then next week, I'm going to show you also when you can cherry pick trades going out of my demand and supply zones on my larger time frames also. So if you want full automation like this, I'm going to show you how to do it with different fib combinations like I'm running now. So I'm going to show you how you can use different fib combinations for your tick, your trend, and your offset. That's what I'm running for you right now. I'm going to show you it that way. Some of you want full automation from 9:35 to 11 or 9:30 to 1600. You can do that. I'm going to run the full trading day on this just to show you, the sim tick LG strategy. I'll show you a full trading day here in a second. So you can run this full automation based upon your profit and loss target per trade. It'll only take the first liquidity grab with our trend zone only. I'm going to be going over all those ratios with you. Secondly, I will show you in the trading room how we can pick out which trade could possibly run that 5, 10, 15, 20 point where you can utilize this as a trade management software also. So there's two ways you can do it. A lot of you will like the SimTick strategy and just let it run for a certain period of time, which I think a lot of you guys are going to do, because now it only takes trades with trend only. And the larger Renko sizes, we can use larger Renko sizes now. And this is a very big point. Now, from the old version to the new version, now we can use larger Renko sizes because we have a defined stop and profit target per trade. So before, you'd have to wait for a closing basis for the bar to close. And if you're using larger Renko sizes, that wasn't conducive to letting it automate around the clock, right? Well, now we can do that based on this right here. Now we can do it because you can use a larger Renko size like this and say, hey, I only want to risk $300 per one contract per trade and profit target $300 per contract per one trade. Or this different Renko or this different Fibonacci combinations, which I'll show you how to do on smaller Renko sizes. I only want to risk $150 per one contract and profit target $150 per contract. Or I only risk 1 point and try to make 1 point if I want to scalp. We can use larger Renko sizes now because we have a defined stop and profit target per trade. Where with the older version, you'd have to have larger stops because it was on a closed basis. Now it's not it's on a tick basis. Now I did include the closed basis, so you can run it to the sim close LG strategy. That is included. So it takes the same criteria here. The biggest difference between the two, and that's why we're doing these videos, that's why we're going to train you all next week. The biggest difference is that the tick, which that's my favorite, that's one I wanted to release to you guys. The tick has a trailing stop loss and a profit adjustment, which I'm going to go over in market replay in 1 second. All right, so I don't want to make this video too long because we'll be training all next week on this, but I want to give you a brief outline what we want to do here. So those are the two strategies you got. This is the main one. This is our main one right there. That's the one we want to trade in the room, and that's the one we want to trade on automation. You can use a sim close if you have larger accounts because it will take the noise out a little bit more of the Renko charts. But this gives you a predefined stop loss and profit target on these larger Renko sizes when I show you these Fibonacci combinations that we like to use on the tick, the offset, and the trend. We'll be going over this a lot going forward. And for traders like yourself, Vincat, that wants a full automation, I think you're going to like this because now what you'll do is on these larger Renko sizes, it's only going to take trends with the zone trend. But the profit and loss per trade is going to help you define your goals, meaning what is my profit target per trade and profit loss that I'm willing to withstand on the micros or on the larger contract. And this is based upon one contract, okay? And then the trailing stop, this is the sim tick LG strategy will only adjust on the sim tick trailing stop, okay? Then what you can do, if you can let it run full automation around the clock on these different Renko sizes, which I'll show you based upon a certain profit and stop loss per trade. But let's say you want to cherry pick your trades. I found a way off of our zone trader, our larger zone trader, putting this on a larger Renko chart where the biggest breaking point in the market can happen 3, 4, or 5 times during the day. What I recognize on these big liquidity grabs is, let me get this off here, is what I recognized on these larger liquidity grabs is I found that we can find when these big trades happen like this, on these big turning points, I can find out where we can get involved right in the middle of that move and take the first liquidity grab on this big punch down. And I did that a little bit for you last week in the chat room. We're going to do it Monday through Friday next week. I can find the major inflection point when this market moved from 55.05 down to 86, where these markets can move right on the first liquidity grab after breaking this larger zone. We can use the automated system to fire us in the trade, and these potential runs are 10, 15, 20-point runs. I'm going to show you exactly in the middle of the move where to look for the exact line in the sand when this market transitions. I found a neat way to do it. We'll go over that all next week, where you're trying to get this upper half of the move. So we'll go over that next week. So there's a couple ways you can use this automation. Is you can use it for that, to let it fire in the trade on trades like that, or if you just want to run it around the clock, you can do it with this. Remember, the SimTick LG strategy, that's the best one to use because you can adjust the trailing stop loss and profit adjustment, which I'll show you in 1 second. Okay. So to reiterate, it's only going to take the setups with our zone trend only. It's now got a profit and loss target per trade. It takes only the first liquidity grab after the V top, V bottom, the trailing stop loss and profit adjustment, and the time of day trades. All right. If you're going to do it manually, where you're looking to turning on, turn off when it's hitting these big inflection points 3 or 4 times a day, which I'll show you all next week how that works on live market action Monday through Friday next week. If you're going to do that, it works the same way. You would just turn the strategy on when you're breaking through those line in the sand trades, and you can let it work. If you want to let it run a certain time period, time of day trades from 9:35 to 4 o'clock, there's certain Renko sizes, certain combinations like this that you can use on your tick, your trend, and your offset. That's what I'm running right now, which I'm going to show you. All right, so let's get this thing running here. Let's go over a trailing stop loss and how it works. So let's say you want to do full automation with this and let it run on a certain Fibonacci combination to look for. So when you're ticking along, and let's get ticking here. So we're ticking along. It's going to look for the first liquidity grab after a trend change on my proprietary Sim Renko and a proprietary zone. So if my zones are red, it's going to look for shorts. If it's green, it's going to look for buys. So right when it turns green here, it's going to look on this Fibonacci combination on the tick and the trend. It's going to look for distortion in price, which it does right here. This is the first distortion in price, and this is where it's going to look for if it closes back above this candle here, it will get long right around 52.87 3/4, and then it will show a blue line that pops up, which is your predetermined profit target, and a red line, which is your predetermined stop loss. Remember, this is SimTick. It's not SimClose. SimTick's my favorite one to use because you can have a profit per trade and a stop loss per trade. So as it goes along, and I'll shut it off here in a second. Okay, so it went along the market. So as went along the market, this is your target price that you're trying to get to. So let's say you put this in as your total profit target of $300, $400, $500, $1,000, whatever it is. Okay, your stop will automatically come in. Let's say if you have your stop at $300, $200, whatever it is. Okay, so once you see that, enter, you can click on this and you can move and click on it. And once you stop it, that's your new stop. So as price moves up, it's like chart trader. Once you click off on that, that's going to be your new stop on all your contracts. It doesn't matter if you do 1 contract, 2 contracts, 6 contracts. So let's say you're moving down and you had a short here and you're moving down and it's just cranking down. You can just, on the same strategy chart, click, let it go. Click it off. Click, let's say you're still moving down, click it off. And then right when you get, it comes back up and touches it by a tick, it's going to close you out. Okay, so you can adjust your profit target and your stop loss. Let's say you have a $200 stop loss and you have a $1,000 profit target, and your profit target's way out here. You can adjust your profit target the same way. Click and move your profit target. So you're able to move your profit targets and your stop after entry. Okay, so you can do that simply by clicking on the mouse and doing that. Now, when you're doing different Renko sizes like this, combinations, which I'm going to get you, remember, past performance is not indicative of future results, so don't look at this realized gain and all that stuff. Yeah, I'm just showing you how this algorithm works. You can use this for full automation if you want to, because I have a predetermined profit target, predetermined stop loss. I know my risk going in on the stop loss. I know my profit target. So if I get a trend change where my outer zones is a little bit longer Renko size. So if I have a target, a stop loss, X stop target, it's going to only take with trend now. You're not going to get counter trades. And so you can let this thing run around the clock. So it's only going to take the first liquidity grab after the trend change. So here you got the trend change, right? And here's your first distortion in price. It's going to take the first liquidity grab buy, right? And put your predefined stop in and go on. Now, if you want to trail your position, remember you can click on your stop loss line. Let's see if another one comes up and I'll show you. Remember, so now once you're in a trade, it took the first distortion or liquidity grab trade right here. Once you're in a trade, you can click on this stop. Let's say you want to put 2 ticks above that liquidity grab high. Some traders like to do this. They like to look a couple liquidity grabs back and put it 2 ticks to reduce the risk after the entry. And you can do that. You can move, you're able to move your profit target here or your stop loss and trail the position. So let's say you got long here at this level, right? You can move your stop as it moves up, move it up, click, move it up, keep moving it up. And then once you click it off, that's where you're going to get out of your position. Okay, so here, if you want 2 ticks above there and you want your profit target all the way down here, you can click on it and you can keep adjusting your stop and your profit target. Okay, that's a neat feature that we put in with the tick, especially if you're using larger Renko sizes like this. It slows the market down. I mean, this I'm going at a fast pace right now, but if you look at this on normal speed, if I look at this at a normal speed right now, look how slow this thing's moving, right? I mean, that's normal speed on this type of Renko chart. So you got plenty of time to adjust your stop. You got plenty of time to adjust. That's normal speed in the market on this type of Renko size. So you got plenty of time to adjust. If you're using a 1-1-20, you're not going to have a lot of time to adjust your stop, you know what I mean, or your profit targets. So that's why if you're using full automation, I like using these larger Renko sizes because it gives you plenty of time to adjust your stop and so on, and your profit targets, and you can trail these positions. So that's what's neat. And the cool thing is using these different Renko the Fibonacci combinations for your tick and your trend and so on. It's real neat because it'll show you. It can show you different profit loss and profit per trade and stop loss per trade that you can take for these trades. But this is totally adjusted with the Sim Tick Renko. Let me speed this up. All right, so this is totally adjustable on the Sim Renko. All right, so now let's read to the next. So it's only going to take trend only. It only takes the first liquidity grab. So you have to worry about taking another liquidity grab because what it's doing is you can trail price. So until I get a close above my outer zone on this larger Renko size, it's not going to turn green candle. Once it turns a green candle, what we can do is look for the first distortion in price, and then we can look for a possible liquidity grab buy on another trade coming up. So it was, as you can tell, it's not going to take any counter trend trades against you. It will only take the trade with the overall trend. So here's another one that came up on this Fibonacci combination with the tick and reversal. So here again, you don't have to have your stop all the way down here. So once this distortion in price gets in, Let me slow this down a little bit. It's going up, and it starts going up, right? And you start moving up, and you turn green. Listen, you can move your stop up. Let's say you want to move your stop up to here. Now that's your new stop, right? So that's your new stop. So, or let's say it's moving down, and you're cranking down, and you're cranking down hard. You can move your stop wherever you move your stop and click off on it, no matter how many contracts you're going to do. So you have a predetermined profit per trade and a predetermined stop per trade. Let's say you do 2 contracts. You can have one saying, hey, until I get to my profit target, I'm going to take the first off at 12 ticks. And then I'm going to go break even +1, right? Or you can say, take the break even off and say, I'm going to take the first off at 12 ticks. They'll take it off for you, and they'll still keep your original stop loss per trade and profit target per trade. And then you can put your target way out to 100 ticks if you want, and you can adjust it, keeping that small target in there anyway. I mean, your stop loss. But you can use this to find out what level that you want to get into these trades as far as the stop loss goes and as a target goes. See, you can see if I move it up, it's going to get your stop in based upon your Renko size you use. So let me fast forward this real quick. So just remember, what it'll do is it will take only trades in conjunction with the overall trend direction. Make sure we understand that. Only trades with trend direction. And remember, you can adjust when you tick trend, you can adjust your trade. Now, this is just doing one contract, but you can adjust it per trade based upon your overall risk assessment that you want to do on your account. So when you're doing these trades, let me rewind it here again, and then we'll just run it through the whole thing real quick to show you. When you're doing these trades, the best thing to do is market replay. Remember, Renko charts, they're not time-based charts. These Renko charts are not based upon time, right? They're non-linear. They focus on price direction. So knowing that, they can identify really reliable turning points when you change your tick and your reversal. And I'm going to show you how we can do that based upon these different Fibonacci combinations, right, that we can use. Everybody's like, well, what's the best Renko size? Is 1/120 the best Renko size for total domination? No way. It's too small, way too small. But we couldn't do larger Renko sizes on the prior version without having larger stops. Why? Because I didn't have a profit and loss per trade target. It was relying on the reversal bar. Wherever the reversal bar came in, if I had a 150 reversal bar, guess what? You had a 150 tick stop loss. Well, that's not the case now. I can run a 150 Renko bar type now and have a $300 per profit stop loss or profit target or what have you. So you can use these different combinations even on larger Renko sizes because we have a predetermined profit and stop loss. And we're going to be going over that all next week. Like I said, we just released the software out to everybody. The last couple of days I've been out of the office, so we didn't have a chance to go over this. I'll be in the office Monday through Friday next week for you members, and we're going to be going over other stuff. We're going to be going over how to use a full automation, and then how to use also how to use full automation and how to use it on possible big inflection points in the market. Would I trade a 1/120 on full automation? No way. Because it's just too small a Renko size. Can you use the 1/120 on different inflection points? The market, which I will show you, which I'll show you next week if you can. I'll show you how to do that. But when you're looking for full automation, you want to go larger Renko, have a predetermined stop like this, predetermined stop loss, predetermined profit target, because then you know your predetermined stop per one contract and your predetermined profit target. And that really helps out with automation because you know your risk going into a trade, whether you risk 150, whether you risk whatever you risk, you know exactly going into that trade what that's going to be. And that's very, very important for us to understand when we're getting into that. All right. So a few things. Next week, Monday through Friday, I'll be in at 8:15 a.m., 8:15 in the morning. Download the software. You just got this software. Okay. Just got this software. I want to train you guys Monday through Friday next week. Just like this video, replay this video. Just remember, use the tick. We're using the tick. Sim tick. We're not using the sim close. We're using the sim tick. Sim tick. The sim close, right? The sim close. The sim close would be what we want to use because you can adjust your stops and your target, right? Sim close you cannot. Now you can run the sim close you want if it's like the prior version. It does the closing basis with all these different whistles. Now when you do market replay, let's go back to this real data. When you do a market replay, remember past performance is not indicative of future results. Let me just show you how this works. This is one contract on the S&P during the day. So when you're doing this, and I'm looking at the trade setups, right? This is very important for you to understand. I had a $500 profit target per one contract on this whole trading day, right? From midnight all the way to 1:30 a.m. until 4 o'clock. Remember, past performance, not indicative of future results, but I'm just trying to show you how this works. I had a $500 profit target. You see how it's not going to get exactly 500 because the market's ticking fast on you. It's going to be pretty close. So if you put in a $500 profit target, it's going to be really close getting you out right around that 500 bucks. All right. If you do a close basis, your stop loss is not going to be close to your profit or stop loss. So your stop loss, let's say if you had a $500 stop loss per one contract, $500 profit target per one contract, it's going to be pretty close to getting you in and out just like this. Okay. But if you have a closing basis, let me rewind this again. I want to make sure you understand the difference. This is on a sim tick, especially when you're doing full automation on these larger Renko sizes. It's important for you to understand this. It's going to get you out pretty close to where you put your profit and stop loss target at. Now, I'm going to show you the exact Fibonacci combinations that I like in different markets, with the different profit and stop loss targets. And then you can hone in which one that you prefer. I strictly use a combination of these Fibonacci's. I don't use any other combination. I use a combination of these Fibonacci's, and I don't use a 1-1, a 150, 1-1, 230. Yeah, I don't use that. I use a combination, which I'll show you how to do in the room next week. That's what I'm running right here. I'm running a combination of fibs on this one, on this to show you how it works. But let me show you real quick as we run through this one more time before Gerald shuts us off. This is a good training video for you guys because I know you just got the software. So let me show you one more time the difference between sim tick and sim close. This is very important you understand that sim tick is what we want to use. And I'll show you sim close is the prior version with all the bells and whistles. And I'm going to show you the difference and the biggest upgrade with the strategy. This should really resonate home with you. So let me go ahead and hit click and let's go market replay on this guy. All right, we're ticking through. Let's wait till the trade comes up real quick. This is the biggest difference between tick strategy and tick close. Remember, I'll be in here Monday through Friday next week. Few members. We're going to go over all this stuff. We're going to have these combinations you can use in the room. I'm going to show you in the room how to use them. All right, so here's our first trade. Here's our price. Okay, here. So here's the difference between a sim tick and sim close. Here's the biggest difference. All right, if price comes down and touches my predetermined stop right there, it's going to tick me out. Or if I move my stop up here, wherever I adjust my stop, if this price touches that stop line when I move it, it's going to trade. Okay, that's sim tick. If it ticks, wherever I adjust it at, no matter if it's here, wherever it's at. Once I click off on it, once it touches that, all my contracts are going to be sold. My trailing stop. And I can adjust it as prices move it, whatever. It's going to get you out. The sim close, the difference after trade, it's going to wait until it closes below this threshold. That's the biggest upgrade. That's why when you use larger Rico sizes now with this new algorithm, your performance goes way up. Because the prior version, if I use a larger Rico size and I closed below my stop line here, that's when it's going to sell. It could come all the way down. That's the difference between sim close and the difference between sim tick. Where sim tick, it's right to the tick. As soon as it, wherever I adjust it, as soon as it touches it, right there, see how it popped me out? As soon as it touches it, it's going to fire you out of the trade. That's the difference. Where close will be the closing candle. Let me go over another one. So, too fast. Let's go over another trade real quick. Okay, the first distortion in price coming up. We'll look for a buy. 1 second. Make sure you guys understand that. All right, here's the first distortion of price is going to be coming up with a trade. So here's the first distortion in price. There's your trade. One second. Hey, Gerald, 1 sec, man. So right there. So here's the difference in price. Here's the difference in how it works. Yeah, Gerald, let me see your message real quick, man. Let me see. All right, you see short 52.20 and a quarter right there? At all? The difference between sim close and sim tick's going to get you out when it touches this, wherever your stop line is, right? You guys understand that? Hand me a Y if you understand that. Sim close is the older version, only with all the bells and whistles. You guys on the same page with that? The tick will get you out right when it ticks. Now, if you want full automation, like I said, you don't do anything. They'll pop up automatically. I use the sim tick with full automation also. I just gave you the prior version because some traders like the prior version. But there's a lot of different fib combinations I'm going to show you. Is by using this combination scale, what I found is that any combination of the fib numbers here on your tick and trend seem to work really, really good with the algorithm. Based upon, depends how much you want per one contract and how much you want per trade. If you do large numbers like this, large fib numbers, you know, when you're doing 300, 500, 800, 1300 Rinko, you want a larger stop and a larger target. When you're doing smaller Rinko combinations, you know, let's say a 235 or 61117, you know, or 172845, you can use smaller profit and loss combinations. And we're going to go over all that next week. We'll go over all that next week, and we'll make sure you guys understand that. All right. And I apologize for yesterday. Like I said, the last couple of days, I've been dealing with some estate issues, so we had to get that taken care of. But we're going to start training Monday through Friday of next week on all this stuff. And Thomas, I'm going to show you these different combinations. I'm going to type these combinations in for you. And then Thomas, I'm going to have different markets. These are the ones on the S&P. These are the ones on the NASDAQ futures. And then you put in your profit and stop loss target and do market replay and see which one fits you the best. Stop loss, because we don't have to worry about the bar closing. That's the biggest thing. What the difference in the tick and close is let me run this again, is that it's a tick basis now, meaning it's a profit per trade and loss per trade. You won't recognize how valuable that is on a 1/120, right? Because it moves so fast, you don't realize how valuable it is. but you really understand how valuable it is when you use larger Renko sizes on this algorithm, because now it doesn't wait on a closing basis. If I use a 150 Renko bar type, that means on a sim close, I got to have 150 stop loss tick, right? Not anymore. So you can adjust your tick trend by doing a profit and loss per trade now, not per close, it's per tick. You see what I'm saying, Thomas? That's a big advantage. And that's why I'm going to show you how this works really well with these different fib combinations. But you can always do market replay when you try these out. If you want full automation around the clock, I'm going to show you this tick LG strategy works. It's a major upgrade, guys. Major upgrade. You don't see that on the smaller Renko charts because they're just too small. Larger Renko sizes, it works really well, especially when you mess with the tick and the trend combinations, which I'm going to show you. Okay. So you guys have a happy Easter. I want to get in here and do a quick video for you guys. I'll get with Gerald, see if this video took. Hopefully it took. And then we'll get I'm going to be here Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Monday, Tuesday, Wednesday, Thursday, and Friday next week. I'll be popping in here on the microphone. We're going to start going over on this. And then I want to go over this too in the room. I found a way, like I said, to find a way to capture these moves in the middle of a big trend change right here. I found a way to stick on the right side of the market. I'm going to show you how that works also. And this is when the market usually crumbles 10, 15, 20 points in this little sweet spot. It only happens about 4 or 5 times during the day. I'm going to show you when there's major speed coming in. So I'm going to train you guys how to do that also, that I've been taking advantage of. But this is the major one you want to use. That's why I want to do a video. I know you guys got all the software. You don't know how to use it right now. You can't just turn it on a 120 and expect to see great results. You're not going to get results on a smaller Renko if you want full automation. If you want full automation, you got to use different Renko combinations on changing your tick, changing your trend, and I'll show you how to do that next week and on all these different markets. Okay? You guys got any questions? Questions? All right. SimTick LG strategy is the best one to use. We'll start training on this on Monday. Make sure you have it downloaded on your computer. Okay. You guys have a happy Easter. And we'll start digging into this on how to use it, on how we want to utilize this in the room, and then how we want to utilize it with full automation if you want full automation too. Okay? All right, you guys have a happy Easter, and I will check you guys out Monday at 8:15 on Monday. And then you got any questions, let me know. But remember, we're using the SimTick LG strategy, not the Sim Close-Up strategy. Okay? All right, George, have a good weekend. Vincat, Thomas, you guys have a good weekend. And then I'll see you guys, Bill, I'll see you guys next week. Okay, Stu, we'll see you guys next week. And we'll start training this and so on. Vincat, before he goes, the close has a higher risk with stop loss, a higher amount loss. Yeah, the stop loss is because it's on a closing basis. So it's not on. Let me make sure I understand, Vincat, before you go, because this is very. You want to use a sim technology on larger Renko sizes for full automation, because whatever your stop loss is, it's going to get you out when it ticks to that stop loss. And if you don't do that on the close, your stop loss, if you say you have a $300 stop loss, it may go to 450. Does that make sense? Or it may go to 500, depending on how large that bar is. Where the tick's going to get you out right around that tick. That is huge. That is huge because it lets us know. It lets us know. So let me run this thing again here, just to make sure we understand. So as it's running through these are all tick, right? So this is a full trading day. This is all tick basis. So when you see this red line pop up on all these trades that it does during the day, that's going to be its hard tick stop. If it touches that, it's going to get you out. If it touches your blue profit target, it's going to get you out. So when you're doing this is obviously a fast speed, but when you're doing this, you can you know, on a tick basis that when these come up on a tick basis, your profit and stop loss. So let's say that you want to move your stop down. Let's say you're in this trade, right? And normal speed on this Renko chart's this fast. Here's how fast it is, right there. So we're ticking. That's how fast it is. So you're saying, okay, I don't want to touch it, and I want to lose my normal stop. You don't have to move this at all if you don't want. This just shows you where you put your profit target in and your stop loss in, right? So whatever you put on your parameters, if it's $500 per one contract or $300 per one contract, that's where this red and blue bar is going to pop up. After it enters, then you can adjust. So let's say that you're like, okay, I'm in this trade now. It's ticking live. It's this Renko size goes slower, and I want to click it. I want to move my stop down to above this swing high. So now I want to move it to there. Now that's my new stop. If you use a close, the sim close, you can't do that. It's not going to allow you to move. It's not going to allow you to move this, number one. Only the sim tick will. And number two, it's going to wait till this bar closes above wherever value that is. So if that's your new stop line, it's going to wait till this candle. It may close here, may close here, it may close here. Does that make sense? You see the difference? So now when you do testing and you find out what Renko size you want, now you can pinpoint how accurate it is. Because now you know exactly how accurate do a market replay that Renko combination can be because it's on a tick basis. Is that cleared up, VinCap, for you? The close versus the tick? Because now whatever we come up, these combinations I give you, all these different, I got some cool combinations to give you. Got some cool combinations. And you say, okay, I like your combination. I'm going to try it with a $150 stop loss and a $150 profit target and run it. It's going to give you pretty much how it's going to be in real market action with market replay. Or if I give you this certain combination, okay, I'm going to do $300 per one contract, and I'm going to do a 3-to-1. I want a $100 stop loss with a $300 profit target. I want a 3-to-1 reward to risk. You know, or I want $500 for my profit target and $250 stop loss, a 2-to-1 reward to risk. Put it in with my combinations and see how it works. Okay, so that's how you want to do it. Okay, so that's the big difference. Use a sim tick. Now, if you want to use smaller Renko sizes, I mean large Renko sizes like this, you see how slow it's ticking? It gives you time to adjust. It gives you time to adjust your targets and so on. Okay. I prefer, when it comes to full automation, I just let it run on automation like this with the sim tick, with a predetermined stop and a predetermined target price. Now, if my strategy gets in a trade and the market's running, then I will trail the position down. If it takes a big run real quick, I'll click and I'll move it up. But if you're doing full automation, you don't even have to even touch it. It's just going to show you these lines where your predetermined stop loss and target is. It's pretty cool. It's a real big upgrade, right? You guys just don't see that yet because you're probably just looking on these smaller Renko charts. You don't realize what you have in your hands yet. So it's a really neat algorithm on larger Renko sizes because it controls our risk immensely because it's getting us out to the tick, not in the closing bar on our previous strategies. But I'll get you guys up to speed and show you how that works. I'm going to give you a lot of combinations. You can make your own combinations. If you're going to do combinations, you want to do combinations off of this, and I'll get this out to you. What I found, the Fibonacci sequences for tick and trend work the best. You do all kinds of combinations, but I use only these numbers in my combinations. on my tick and my trend, that's most important, and my offset, they're going to be one of these three numbers. And I'm going to show you how that works, how it smooths the Renko charts out, and then you can do that as far as that goes. Okay. All right. So you guys have a good weekend, and I'll check you guys next week. The market's closed, obviously, but we'll dive into this Monday through Friday of next week, and then I'll be getting combinations out to you guys also, and you guys should like this tremendously over the previous version, just because it's on a tick and a trailing stop loss. Like I said, on a 1/120, it's hard to adjust your stop loss. Too fast a chart. Even in today's environment, because of interest rates, because of the tariffs and all that stuff, the market's been going crazy. To me, the 1/120 is way too fast. So I've been slowing it down with these larger Renko sizes, which works well, even with smaller stops and the same profit targets. All right, have a good weekend, and I'll see you guys Monday. Have this open Sunday night at 6 p.m. You guys take care, and hopefully that gives you a little bit overview